Hey guys, welcome to Stock Talk. Today, we're going to talk about a penny stock in the molecular diagnostics field that's generated quite a bit of stir in the investor community over the past few months that caused it to explode, rising over 100% in just a couple of months. We're talking about lexagene, or as it's known by its stock ticker, LXXGF. In this video, we're going to talk lexagene, what they do, and what caused some of their bigger stock movements recently. We'll also look at what the company is going for it, and where the company stands now. Finally, we'll discuss what we think about lexagene as an investment and why it's a buy or a sell. We see that most of you are not subscribed yet. Subscribe, since it helps with the YouTube algorithm. You can always unsub later. Also, favor yourself by hitting the bell to get reminded when you have a new video. Now let's get into it. Lexagene is a molecular diagnostics company that historically has worked on pathogen detection tools for everything from veterinary medicine to food safety and human medical diagnosis. However, since the COVID-19 outbreak, that's of course been their main focus. Remember to hit that like button and make sure it turns blue. And of course, it was in early November of last year when this penny stock received its first big boost after it announced that it had received a purchase order from a multinational biotechnology company for lexagene's MyQ lab system, which has successfully detected several COVID-19 variants, including the UK variant, which is possibly more contagious and deadly than the original strain of COVID-19. After that announcement, investors began to take lexagene seriously as a provider of much-needed medical tools, and in just over 2 months, lexagene's stock price shot up nearly 95% from 49 cents to $1. Lexagene's winning streak continued basically uninterrupted until mid-February of 2021, when it was announced that Dale Rebec would be stepping down from the board of directors and his position as president of the company, and that Stephen J. Mastrocola would be joining the board. For 19 years, Mastrocola was an earnest and young employee, and he has 40 years of accounting and auditing experience, and other important financial milestones in a company's life, and he'd even focused his auditing career on emerging and growth-oriented firms, like Lexagene, in the life science sector that produced medical devices and diagnostics, also like Lexagene. Despite Stephen Mastrocola's impressive resume, however, investors didn't take kindly to the news. As is often the case with penny stocks, Lexagene's inherent increased level of volatility kicked in, and what started as a slight decline in stock price precipitated a 27% drop in share price in less than a month. In other words, Lexagene's share price was $1.10 on February 16th, and as of March 4th, it was only 80 cents. This past week was also rough for Lexagene, but for reasons much further out of their control. The chair of the Federal Reserve, Jerome Powell, announced that the Fed would be increasing interest rates, causing a massive sell-off in tech stocks, which includes LXXGF, on March 5th, 2021. The reason the interest rate has such a big effect on the stock market is fairly simple. Basically, the interest rate is how much money the Federal Reserve, which is the United States central bank, declares it has to cost to borrow money from a bank. This affects how much money investors can get from investing in debt instruments, such as bonds. Pretty much, as the interest rate goes up, bonds become more attractive, and as bonds become more attractive, stock prices will tend to decrease, as now investors don't have to rely on buying shares to make money. And in a market like today's, where many argue the average share price is a bit overvalued due to extended periods of low interest rates, any increase in the treasury yield, which is just another name for the interest rate the government has to pay you for buying their bonds, could cause massive sell-offs, like the one we saw on March 5th in the tech sector, when many tech stocks dropped by as much as 7%. This negatively affected Lexagene, who similarly dropped 6% in one day. Now for the good news, and the reason I personally think that Lexagene is a great investment at its current stock price. First of all, the massive tech sector sell-off on March 5th happened to everyone, so it's not necessarily indicative of anything being wrong with Lexagene itself. In fact, the sell-off might actually bring share prices like Lexagene's low enough that investors start to see them as a bargain and scoop them up as soon as the sell-off concludes. Sure, rates might continue to rise, but as investors begin to expect that more and more, each subsequent rate hike isn't likely to have as dire an effect on the market as this one did. Secondly, and most importantly, Lexagene just announced on March 2nd that they've received $3.6 million from the exercising of warrants. A warrant is an option to buy a stock at a given price, and it's usually given either to people who buy a company's bonds as an added incentive, or perhaps to employees who join the company. When a company like LXXGene makes a significant amount of money from stock warrants, it's a very good sign about investor confidence in the future of that firm, and there's certainly good reason to be optimistic about LXXGene. According to LXXGene CEO and founder Dr. Jack Reagan, LXXGene achieved its first commercial sales over the past few months, and the company has a very positive outlook for 2021. Not to mention, the income generated by the exercise of the warrants goes straight towards LXXGene's treasury and can be used for expansion, operating expenses, whatever the board deems fit. What's more, COVID-19 has seriously dampened LXXGene's operations over the past year, and as restrictions decrease over the next couple of months as a result of more Americans becoming vaccinated and hopefully reaching herd immunity by the summer, LXXGene anticipates robust demand for the MyQ lab, that diagnostic tool that can detect COVID variants. In fact, the company is so sure of increased demand for the MyQ lab that they're hiring additional sales representatives for the veterinary and open access markets, especially in the West Coast, Northeast, and the Midwest. In short, LXXGene is a great buy, and at the moment is quite a bargain. At only 77 cents a share as of March 7th, it's still incredibly cheap to buy this stock, and it has so much buzz and such potential for great things in the future that it would be a waste not to. As COVID restrictions clear up, demand increases for the MyQ lab, and LXXGene uses its warrant income and soaring investor sentiment to fuel further innovations in the future, I would expect this stock to leave penny stock territory and possibly trade on a stock exchange, thereby exposing it to even more investors. So guys, that was a brief overview of where LXXGF currently stands in the market. Despite a recent drop, I think LXXGene has so much potential and positive investor sentiment that it's hard to ignore. But what do you guys think? Is LXXGene a bull or a bear? Let me know what you think in the comments down below. If you like what you saw, remember to smash that like button, and subscribe, and turn on notifications so you don't miss more videos. And I'll see you guys in the next video.